Okay, so I just wanted to talk about the futures chart here. Now, there's no question about it. It's not good that we are doing this below all moving averages. That's pushing above price and can suppress price and push price down into a bear market, right? It's possible, and that's well, I mean, it's part of the worry that probably everybody sees. I'm not sure how many traders use moving averages or whatever, but that's a concern. If price can't bounce to break above these, it's going to get forced and pushed lower, suppressed. Now, for example, gold. If we look at gold here, well, we can see exactly what happened, and we've talked many times that this is a possibility of the outcome of Bitcoin. Also, Bitcoin is digital gold at this point. Now, there is some structural differences um, on them. Gold had a lower high, and Bitcoin, well, had a double top. Where will I draw this trend line? Put it there. For me personally, I I have to think that um, although it's bearish, right? Although this is bearish structure, bearish nature, I have to be slightly impressed with Bitcoin's resilience to not break down from this point, right? In in very bear markets, price will usually not have huge consolidations like this. I mean, it can, but if it's very strong to the downside, it will just continue to break down. Of course, gold did actually break down here, faked out, bounced, faked down, faked out again, came back up and based, and then we actually broke out. This is exactly what Bitcoin needs. Okay, so if we look at the length of Bitcoin in this consolidation, we'll just say 40 bars. Okay, that's 40 bars. Now, if we go back to true bear markets, you can see that drops are usually sharp and fast and hard and fast. Now, the largest consolidation period that Bitcoin had was probably here, and that's it's nowhere near as 20 bars. Okay, we are now actually putting in a giant base, and we're not even broke down yet. We're not even out of it yet. So the longer the base, um, like for example, this was the big base. Okay, so this is why people are trying to say that it's starting to remind them of there. That was 70 bars. We'll call that just for the sake of it. But you can see the entire downtrend. It never had any large basis. The last time we had a large base that broke down below all moving averages, like Bitcoin is right now below this, was back in 2015. And we did actually, in fact, create a large base. And there was spikes. And what was this crash? From the high to the low, that was 37%. Obviously, the one we have at this point in time is a lot worse, 50 something. But again, there was this base, and we needed this long base. So what I'm trying to get at is the longer the base. This is 52 bars in here before we started to move back up. In total, you could say 60 bars. But what I'm trying to get at is it's an interesting fact that we are still in this base after all this time. Okay, that we are still here. It's to me, it's potentially a sign of strength, and maybe it might play out like gold played out. This was quite a large base as well. Now this is different, obviously, the in terms of time and length and structure. Well, you can see there that's 60 days, and I actually started that a little bit early. But even into this point, sort of here is kind of what Bitcoin has done, and relatively near. Of course, gold is a very slow moving market, and it takes a lot longer to consolidate and stuff. But in terms of nature and structure, for me, there's a certain element of strength to this. Now, don't get me wrong; it could break away and roll away, but it's definitely something I'm watching and keep an eye on. That we are still here. Why are we still here? Time is a critical element in the stock market, or in any market, I should say. No, I know exactly why we're still here because this is the low. This is the yearly low. It's a 3 month low. It's a 6 month low. It's probably a monthly low as well. So that's exactly why we're here. Now, if we look at gold here, when it had this terrible, terrible crash, well, this is bad for gold, but when it had this, even the 6 month, the next candle, no matter how bad this was, the next two candles never went lower. And yeah, never went lower. And we actually had that bounce of a 50% retrace of that candle just by eye. I didn't actually measure that. So as bleak as it looked, price held and bounced. So there's no question about it. Bitcoin is bleak. It's pretty desperate here, pretty bad. There's the yearly open, and the 6 month candle will be the same. But in theory, it's implying that this low should hold, right? The low should hold, and we should bounce. If we don't, and we open up and turn red and keep dropping, well, the dip is going to be an amazing buying opportunity because we will come back up here to take liquidity somewhere up here. Now, when I look at the 3 day, it looks absolutely terrible, right? I'll not lie about it. We've broke down now below the white one on the moving average, and it looks like this is ready to accelerate to the downside. There is no question about that. So you have to call a spade a spade. That is what it looks like on the shorter time frames. If we flip red on a new 3 day, this is definitely worth a short. I really don't think we're going to break down before that. There's 11 hours left. But what I'm saying is this is kind of rolling over. And if we're truly going to fail, maybe it'll break down before the end of the 3 month. But when you look at the 3 day chart on Coinbase, there is the moving averages here. We are not going to break through these very easily. But of course, this is down at $20,000 almost. So there's no question about it. We're in a very precarious position. Bitcoin's sitting on the edge of a cliff. And we have 4 days left until a new 3 month candle. Very last thing here. Yeah, sorry for the video being so long. Now, again, it remains the big drop and the base here with the moving averages a lot lower than price. Okay. Now it reminds me again, as we've talked about this many a time, it reminds me of here, right, where you get the fake out, the stop hunt, and then price bounces right back up. Where you get the big drop and the consolidation. But look at the gap below all these moving averages in here, and could say it looks a bit like here as well. You can kind of just see that here, the gap in between the 50 blue and all these moving averages below with the base forming after a big drop. Right, it looks the same as both of these. Now, both of these bounced, right? Both of them bounced. We are down here. Yes, there was moving average support here, but after these bases, we barred back up, and we barred back up. Now, both times when we did this, there was a stop hunt, right? To get the lows stop hunt here, and obviously this large stop hunt right here. So we've already stop hunted. Right, the stop hunt has already happened. So is the low already in, and are we going to BART back up? Are we going to get that move back up? Well, we're not going to flip red. We're not going to flip green here. Sorry. It's best to trade the new weekly or the new 3 day candle. So very, very mixed signals here. The safe option is to trade the new 6 month, of course.